Remember that your business is the one and only reason that your business exists is to be a vehicle to help you achieve your life goals. My guess is that your life goals include money. Yeah, because not having money causes a lot of problems in your life and in your business. And as a business owner, more than likely, your sole source of income is your business. So we want it to be phenomenally profitable. Okay. So I'm going to talk to you today about how to double your profits. And the first thing that you got to do is the best way and easiest way is to double your sales. And today I'm going to share with you the 4 steps to phenomenal profits. Okay, number 1, let's get to KFP. All right. In there, it has your Inner Circle member PRD, how to get turnkey in 3. And as you'll notice, there are several reports that you want to review each week. And let me go up here and do this also. And that is that, again, you want to track daily sales, just like I mentioned before. So you do that every week. Every week. And I'll show you what I do is I compare it to the previous year. And then when you do your budget, you can compare it to your budget. You can look at it a couple of different ways. And then you do that again every month. And then you do that again every year. Okay? All right. Number 2, determine your average client spend. Very simple. All you have to do is take your revenue, your total sales, divide it by the number of orders, the number of jobs, the number of tickets, the number of projects, and you'll find out what your average client spend is. Number 3, here's how you set your sales goal. Okay. This is what I call the simple dimple thumbnail budget. Another goal for you is that you'll be able to, once you get to KFP, once you know your average job ticket, your average order, your average project, your average client spend when they spend money with you, you'll be able to take all of that and you'll be able to create your budget. Now, you can create it in QuickBooks. It's real simple. If you just go to the budgeting sheet, what it'll do is it'll fill in, your past expenses in those categories. Of course, before you do this, you got to get your financials cleaned up. And then what you can do with that data is you can, when you know a couple things, you can then create a sales goal. But there's a couple things that you need to know. So here's how it works. First, let me ask you a question. How many of you would like to determine how much money you're going to make from your business every year ahead of time? Okay. So let's start with your net profit. Just write it down. I want you you're going to write down 5 numbers. There's only 5 numbers on any income statement. Okay. There's sales. There's cost of goods sold or cost of services sold. Either way you want to put that. There's gross profit. There's fixed expense. And then there's your net. So one of the key things that you need to understand is your cost of goods sold percentage. Because if you don't know what the percentage, what your cost of goods sold percentage is, then you're not going to be able to do this easy peasy simple dimple formula. But let's start with your net. You don't have to tell me, you don't have to tell anybody. You just write down How much money you want to make? Now, of course, it has to be a SMART goal, right? Specific, measurable, attainable, relative, and timely. Let's say next year, 2026 budget. This is how much I want to make in 2026. This is my goal. Okay? And the other piece of it is understanding how to reach goals. What's the formula for reaching goals? We're going to work on that a lot in the first quarter of next year. But right now, I want you to get your financials in a place where you can read them, you can understand it. Now, in the cost of goods sold, what you want in there is your labor, basically your labor and materials. I'll show you an example here in just a minute. Your labor and materials, basically your direct labor and materials. You need to, if you haven't done this already, when you got your payroll, you got all your wages, you need to separate the overhead wages, the salary wages, the office labor with the direct labor in the field or or your materials. Now what I can do is I can figure out how to increase my sales, which is number 4. All right, so we're going to take $100,000 and I'm going to walk you through what I call the 15% factor. Now, this could be $100,000 a month. It could be $100,000 a year. It really doesn't matter. The number doesn't matter. What matters is the formula, okay? So first, what if I raise my price by 15%? Oh, Howard, everybody's already, sensitive about pricing. I mean, I could never do that. Baloney. If you're in that situation, then let me just stick with baloney. Because the truth is if you're offering a good, valuable service to people that appreciate you, they will pay more. I mean, what's the difference between, let's just say, $100 service call and $115? Maybe what you need to do is upgrade your customers if that's a problem. What's the difference between if somebody's proposing something to me and it's $1,150 instead of $1,000? Do you think that I'm gonna be like that's gonna be a problem? No. But I'm gonna give you several things that you can do. You can do one of them, or you can do all of them. Okay. The second thing we can do. What if you? By the way, how do you increase your value so that you can charge 15% more? By delivering the most phenomenal service experience ever. That's how. The next thing you can do is increase your referrals by 15%. How are you going to do that? Well, you're going to promote your referral reward program. You're going to be out there networking. You're going to be out there generating referral sources. By the way, this 132,000 right there, that's assuming that you've raised your prices. The next thing you can do is close 15% more sales. How many of you know what your sales closing percentage is? Okay. How many calls you took? How many legitimate prospect calls did your people close? If it's 60%, you move that up to 75%. Or if it's, 75%, you move that up to 90%. How do you do that? Sales training. We happen to have some of that. The next thing you can do is sell 15% and more services. Question for you. Are you promoting the other services that you have available? This is called client-based marketing. Every month in our service company, we have a mailer that goes out. Twice a week, we have an email that goes out, and we're exposing our clients to more services, letting them know about the other services that we offer. They already know you, like you, trust you, so you're just offering them more opportunity to do business with you. The next thing is you got to lead with financial data. This is leadership, ladies and gentlemen. This is leadership. We got to lead with financial data, not emotion. Now, if you have passion, that's great. Let's get fired up. But we need to understand what the target is. We can't really lead the team if we don't lead with financial data. So I want to show you an example. Now this is 2024. 2024 as opposed to 2023 for my cleaning company. So as you can see, we only did, here's what I do. I look at current compared to the previous year, and I have QuickBooks list the change, the dollar change. Now, as you can see, on this particular period, we're $20,000 down, but what you're probably going to see is that the profit is up. This year, the same company this year, we're actually down by $125,000 in revenue. Several reasons for that. But we're up in profit. We're up by 18,000 profit. Why is that? Because we're always in that business, we're always working on efficiencies in the expenses. So then you have your cost of goods sold. So there's sales. There's your cost of goods sold. I didn't run the percentage on this particular one, but I normally do. So we're going to start with a standard structure of 100,000. Okay. Again, that could be per month, per year, whatever. And then the cost of goods sold is 60,000. But what's more important, is to notice the percentage. That's what's important, which gives us a gross profit percentage of 40%. Our fixed expense is 30,000, gives us a profit of 10,000. Okay. Now, in this spreadsheet, there are several factors here. I just used a 15% factor, and I want to show you what happens when you reduce your price, raise your price, and increase sales, decrease sales. Okay. So let's start with reducing your price. I'm going to reduce my price so I can be competitive. If you reduce your price, does that automatically mean that you're going to get more business? No. Now, can you run a special offer for a specific month or time period and get more volume from people that already like you, know you, trust you? Yes. But it'd be nice to know how much volume you need to do to make up for that, wouldn't it? Okay, so in this case, you just reduce the price, you don't make it up in volume. Look what happens. You just gave away $5,000. You just gave away that's all that happened. You just gave away money. How do you feel about that? Okay, well, Howard, I'm gonna uh, increase sales by 15%. Okay. So I'm gonna raise prices 15%, but I'm gonna make it up I'm gonna sell 15% more. Here's why that doesn't work. It doesn't work because of your cost of doing business. In this particular case, you lowered your price 15%. Your cost of sale was 60%. Doesn't matter what it is. You can plug in your own scenario. And so what happened in this case scenario is I did less sales. My cost of goods sold went up 10% because I'm doing more. I'm doing the same business or more business at a lower price, and so I'm still $5,000 short. So what if you did this? What if you raised your price 15%, and you raise your price and you decrease sales? Our profit was $10,000. Now you're doing 15% less work. Even if you raise your price and you do less sales volume, this is the point. The point is that you're still making more money. You raise your price 15%. You do 15% less in sales volume, and you make more money. Guess who's going to quit first? The price shoppers. Here's what I want you to really see. You ready? What if you raise your price and you didn't lose any sales volume? How do you do that? Get better clients, close maximum number of sales, provide the most phenomenal service experience ever. In this book, Get in the Game, How to Create Rapid Financial Results and Lasting Cultural Change, written by Rich Armstrong and our very own Steve Baker. You want to determine what your critical number is. You want to get your team to focus on that and then compensate them accordingly. And then you're going to be able to live your phenomenal dream life. Every time I think about what I get to do, the life I get to live, not every time, but oftentimes I send Ellen Rohr a note and I say thank you. Thank you for helping me get profitable. Because if my business wasn't profitable, I wouldn't be able to have the life that I have. Your profit funds your dreams. Your profit from your business funds your personal dreams. The one and only reason your business exists is to be a vehicle to help you achieve your life goals.